This is the stage where large players quietly build positions while the broader market remains uncertain and impatient. Historically, this phase can last longer than many traders expect. Large buyers typically prefer to accumulate gradually without pushing prices upward too quickly. Financial markets may appear modern and technology-driven, but human behavior inside markets has not changed much over the last century. Fear, greed, speculation, and patience. These psychological forces have shaped markets for generations. That's one reason why some historical patterns continue to appear across different eras, from stock markets in the early 1900s to cryptocurrency markets today. However, it's important to understand something crucial. Patterns do not predict the future with certainty. They simply highlight behavioral tendencies that sometimes repeat. And in Bitcoin's case, traders are closely watching whether the next phase resembles the breakout stage often seen after historical accumulation cycles. Another major factor influencing Bitcoin's price behavior is supply. Unlike traditional financial assets, Bitcoin has a fixed maximum supply of 21 million coins. A significant portion of those coins is already held by long-term investors. When large entities add tens of thousands of Bitcoin to their balance sheets, it effectively removes that supply from active circulation. Over time, this can tighten liquidity in the market, but the effect doesn't always appear immediately. Markets usually require a catalyst before transitioning from consolidation into momentum. That catalyst could come from several directions. It could be macroeconomic changes. It could be growing institutional inflows. It could be ETF demand. Or it could simply be a technical breakout that attracts new market participants. For now, all of these factors remain part of the broader conversation surrounding Bitcoin's next move. Market sentiment around Bitcoin currently sits in an interesting position. On one side, optimism remains strong among long-term holders. Many investors still view Bitcoin as a strategic hedge against monetary expansion and global financial uncertainty. On the other side, short-term traders remain cautious. The market has spent several weeks moving sideways without producing a decisive breakout. This creates a psychological environment where bullish conviction exists, but impatience is also growing. And historically, these types of environments often precede significant market movements. Not always upward, but periods of tight consolidation frequently lead to increased volatility. If Bitcoin manages to break and hold above $70,000, the technical structure of the market could shift quickly. A successful breakout above that level would signal that buyers have absorbed the remaining supply within that range. In many previous market cycles, once a major resistance zone is cleared, the market often begins moving faster. Traders who were waiting on the sidelines may start entering new positions. Short sellers could also be forced to close their trades. Both forces can amplify market momentum. But markets rarely move in straight lines, even during strong bullish trends. On the other hand, if Bitcoin fails to maintain its position near the upper range and falls below $60,000, the market could enter another extended period of sideways movement. This wouldn't necessarily mean the broader bullish cycle has ended. Instead, it could simply indicate that the accumulation phase requires more time. Many historical market cycles include multiple consolidation periods before large expansions occur. During these phases, patience often becomes the defining factor for investors. When stepping back from daily price fluctuations, the broader Bitcoin narrative remains relatively consistent. Institutional interest continues growing. Corporate treasury adoption continues evolving, and global awareness of Bitcoin as a financial asset continues expanding. The latest $1.28 billion purchase is simply another chapter in that ongoing story. It shows that some of the largest players in the market continue positioning themselves for the long term, not reacting to headlines, but executing strategies designed around multi-year horizons. So where does Bitcoin go from here? Right now, the market sits inside a critical zone between $60,000 and $70,000. Large institutional buyers continue accumulating. Historical trading patterns are being debated, and the next decisive move may depend on whether the market can firmly reclaim the $70,000 level. Until that happens, the current phase may remain a waiting game. But if history has shown anything about Bitcoin, it's that quiet consolidation periods often arrive just before the market becomes anything but quiet. Now the real question is what you think. Will Bitcoin break above $70,000 soon? Or are we heading into another accumulation phase before the next major rally begins? Let me know your thoughts in the comments. And if you want deeper breakdowns of the biggest stories shaping the crypto market, make sure to subscribe to Bitcoin Legacy, because the next major move in Bitcoin might already be starting.
What if the most important signal in the Bitcoin market right now isn't coming from traders, isn't coming from technical indicators, and isn't even coming from the news cycle? What if the real signal is coming from a company quietly buying $1.28 billion worth of Bitcoin while the entire market is stuck in uncertainty? Because that's exactly what just happened. A major institutional buyer has just added 17,994 Bitcoin to its reserves. And now something even more interesting is starting to appear on the charts. Some analysts say the current Bitcoin market structure is beginning to resemble a trading pattern first described nearly 100 years ago in the 1920s, a pattern associated with one of the most legendary traders in financial history. Which raises an important question. Is Bitcoin quietly preparing for its next major breakout? Or are we simply watching another phase of accumulation before the market decides its next move? Right now, the discussion across the crypto market is centered around three major developments: a $1.28 billion institutional Bitcoin purchase, the growing importance of the $70,000 level, and a century-old trading pattern that some analysts believe is resurfacing in the current market cycle. To understand why this matters, we need to look at what just happened inside the institutional side of the Bitcoin market. The Bitcoin market has just received another reminder that not all participants are focused on short-term price swings. Some players continue to accumulate Bitcoin with a very different perspective, focusing on long-term positioning rather than daily volatility. This time, the spotlight falls on Strategy, a company that has built one of the largest Bitcoin treasuries in the world. According to its latest disclosure, the company purchased 17,994 Bitcoin, with the total value of the purchase reaching roughly $1.28 billion. The average purchase price came in at $70,946 per Bitcoin. At first glance, this might look like just another corporate investment, but the scale of this accumulation reveals something much bigger about the current state of the market. Following this purchase, the company's total Bitcoin holdings have now reached 738,731 BTC. To put that into perspective, these coins were acquired for approximately $56.04 billion, with an average acquisition cost of about $75,862 per Bitcoin. This means the company now controls one of the largest Bitcoin positions held by a single entity outside of major cryptocurrency exchanges. And despite the scale of these purchases, the strategy itself remains surprisingly simple: buy and hold, regardless of short-term market noise. Institutional accumulation behaves very differently compared to retail trading. Retail traders often react to headlines, price spikes, and sudden market movements. Institutions, however, tend to focus on long-term positioning. When a company deploys over $1 billion into Bitcoin during a consolidation phase, it sends a powerful signal, not necessarily about tomorrow's price, but about confidence in the long-term trajectory of the asset. Historically, large institutional purchases tend to occur during periods when the market is uncertain, not during euphoric rallies when prices are already surging, but during quieter phases when the market moves sideways. This behavior can gradually shape the structure of the market over time. When large buyers absorb available supply, it reduces the amount of Bitcoin actively circulating in the market. That process can slowly create supply pressure, but the effects usually appear later once the market transitions from accumulation into expansion. And at the moment, Bitcoin appears to be sitting right inside that transition zone. Currently, the Bitcoin market is locked inside a price range that traders are watching very closely, between $60,000 and $70,000. This range has effectively become the current battleground for the market. If Bitcoin manages to move and hold above 70,000, many analysts believe momentum could begin accelerating again. But if the price drops below 60,000, the market could enter another extended period of sideways consolidation. What makes this price zone particularly interesting is the behavior of institutional buyers. The latest $1.28 billion purchase occurred while Bitcoin was trading near the 70K level. And this isn't the first time large buyers have accumulated Bitcoin near this range. Repeated accumulation near a specific price zone often signals that large market participants view that level as a strategic entry point. In traditional financial markets, this behavior is often described as supportive accumulation. It doesn't necessarily guarantee immediate upside, but it can establish a foundation for future price movements. But the story surrounding Bitcoin right now doesn't stop there, because some market observers believe something even more interesting may be developing on the charts. According to certain analysts, Bitcoin may currently be following a historical trading structure described nearly 100 years ago. The pattern is often linked to legendary trader Jesse Livermore, one of the most famous traders of the early 20th century.